Okay, Sushil Choksey as well joins in on the show right now to chat about what's going on with Reliance and mesmerizing. Sushil, afternoon firstly. That's the only way to describe the kind of speed with which Reliance is deleveraging, be it Jio, now done with Jio, next on with retail, and it seems like in the same fashion you're going to see check after check coming in, taking it all the way to making it a $200 billion market cap company. Historic day really for Reliance Industries, Sushil. And I'm sure there are many out there who still have that left out feeling and who've still been sitting on the sidelines when it comes to Reliance. Can they still jump in?
It's a great day when Reliance has achieved a $200 billion market cap with news buzz about Amazon likely to invest in Reliance. It's not very sure how Amazon will come into Reliance as per the FDI norms. So let's wait and see how that, if the speculation amounts to the truth. But going by what the market is rewarding Reliance today based on Reliance Retail deal with Silver Lake and sovereign funds likely to pour in another $5 billion in the company, it's clear that Reliance will be three company structure: retail, Jio, and oil to chemical, comprising roughly all the three stocks valued at approximately $70 billion, plus minus 10% either way, because we know the benchmark based on the current valuation. You need to watch out what Reliance is going to keep cash based on what infusion they get from all these new shareholders. At the same time, what kind of EBITDA these businesses are going to generate and what ownership Reliance is likely to own if they list as a three candidates to existing shareholders or they seek a new listing, that we need to see. And it's a clear path that all three companies can be listed. Reliance Industries is oil to chemical, but they've already gone to NCLT, so we need to watch out how it happens. But a clear valuation indicative that if you're looking for tomorrow, it's possibly there may be not much upside, but if you're looking at a 2-year, a 3-year, and a 5-year horizon, retail investors will still look for rewards, and that is possible.
Okay. Sushil, now I understand that Reliance is in this unlocking mode. Now, if one works with an assumption that Amazon is coming around the corner, so do you think somewhere markets are already pricing in 2-3 years of future? The stock today is excited, but now can it really not be a large mover for rest of the year? Because now the stock is pricing in perhaps almost all the good news.
If you want to create with the kind of cash what you have and what kind of many more future acquisitions which they can do, and you buy at a cent and sell at $1, that Reliance is able to do it. So how much of consolidation in pain of India in COVID and Reliance emerges to use the cash, we don't know. But if you're going just by yardstick, what cash Reliance is likely to get between all the Jio, oil to chemical and retail investment would be roughly around 3.5 to 4 lakh crores. And the net debt, including suppliers credit, would be zero. So your interest burden will go out. At the same time, what kind of expansion they try to do, that we need to see. But if knowing the Reliance growth path of last 40 years from 1977 of listing, they may be a game changer with newer technologies, because in the report and the annual general meeting, Mukesh Ambani has already said that the outlay for investment over a period of next few years between new energy comprising of renewable battery, hydrogen, oil to chemical will have a lot of downstream chemical products. Maybe some digital roadmap can go. They have a payment bank along with SBI, so I don't know where YONO comes in picture or not. We don't know what can emerge and what can't emerge. But, if you're asking me, Reliance has made surprises in 2020. Will the surprises continue in 2020 for the path that retail investors have a benefit with next 2 to 3 years of investment outlook? That's possible, because today every large corporate in the global market which has a market cap potential, sitting on cash, is able to do far wonderful things where new technologies are concerned. Reliance may be able to mop up many startups, many new ideas, and they may be funding. So be it education, telemedicine, whatever their possibility with digitization and COVID, now Reliance may emerge with a winner and consolidator of this kind of startups.
Okay. So if somebody says, should one buy Reliance now, what would you say? Wait for a bad day, wait for a bad patch?
You can not time the stock because the market is in a liquid frenzy, and I don't know if you read about Duncan Miller's statement yesterday, but we can't fight the Fed. The liquidity and other measures are concerned. The world is far underinvested in Reliance, specifically from a domestic area is concerned. So every correction can be taken as an opportunity. But please, whoever wants to invest from now should take a 1 year to 3 year horizon and invest and not look for a reward that in last 5 months, starting from March to now, if you got 150-70% of return, next 1 week or a day or 1 month is going to give you that kind of return. Markets can surprise you both ways, so you should invest only with a long-term outlook. Look for 2022, 23, 24, that kind of a horizon, and make a fixed deposit. Or you may start doing a SIP in the stock on a weekly basis if you're a retail investor. Mutual fund and large investors have their own appetite the way they trade. So there's no advice we can do for them.
Prabal Sen, hi, afternoon. Reliance has managed to hit a double century when it comes to its market cap, sitting at a life high, 2,300 plus levels. What next in store for someone who's looking at a 2 to 3 year horizon? And even in the near term, the question that we were just asking, Sushil Choksey, whether all the positives are already in the price with the high that it's made today.
The positives, can be deemed to be in the price only to the extent that, what happened really was, if I were to be honest, the sell side was caught off guard when the telecom transactions really started to happen. All of us made the mistake of looking at Jio and the digital services business as primarily a mobility business, and therefore the valuation multiples assigned to them consistently reflected that fact, where it was benchmarked to other telecom players. And obviously once the investors started to come in, I think all of us have been forced to realign our views and relook at that business segment and really try and understand to the extent that we can the full potential of the business, which is where the re-rating continued to happen. In retail, what has really happened is that post the experience of Jio, I think all of us have tried to sort of be a little bit much more bullish in terms of prospects, which is where you are now seeing that the implied investment value at which Silver Lake has come in is actually closer to, or in fact a tad lower than what the average street value is to the business already. So to a certain extent, I would agree that, a certain amount of, optimism around whatever retail will bring in and what the benchmark valuation would be is built into the street estimates. I'm not too sure what the buy side would be looking at or what their estimate is, but for the near term, I agree with the gentleman who was talking before that, you need to have a 2 to 3 year horizon. I would suspect that in the near term, 2,300 to 2,400 does seem like a near term range for the stock, even factoring in the kind of optimism around retail value unlocking. But the critical issue really is that even now at this price, I think the margins for the downstream business, we tend to forget how big a significant part of value that business is. They have taken a beating, both in terms of numbers as well as in multiples. So any recovery there, maybe from FY22, will be an additional trigger. And as far as retail is concerned, we are only probably scratching the surface right now of what the retail value proposition would look like when you bring together the assets of Future Group as well as the JioMart's ability to really penetrate the $850-900 billion traditional retail business. I mean, even taking a very small chunk of that business segment as opposed to the $120-130 billion smaller segment of organized retail plus e-commerce as we understand it today. So if JioMart really succeeds in penetrating the traditional retail segment, then I think the numbers can actually achieve a very different scale even on the kind of base that they have built up right now. And I think that will be the critical driver over the next 12 to 18 months to really see the execution of the omni-channel, new commerce, whatever you want to call it, this whole offline to online model that they're trying to build, what success they have and how quickly they can actually tie up the traditional Kirana stores across the country. I think that will be the key value driver beyond 2,400 rupees. That is my sense.
Yeah, absolutely. And who knows? I mean, while we're all excited about what happened with Jio and now what's happening with retail, maybe the Aramco deal does go through eventually. So long-term visibility, Prabal, what is the price target that you're assigning to Reliance at 2,300 right now?
I wouldn't want to comment because we are still reviewing the transactions that have happened and the kind of impact of Silver Lake as well as, Future Group and all. So frankly, the target price that we had earlier in the last published note was closer to 2,300 rupees. So we have not changed it. But as I said, I think the bigger issue really is that one will have to take a much longer term view in terms of what the Reliance entity itself would look like 3 years down the road. And I would say that from that perspective, I would be confident that they will continue to outperform the broader market. I wouldn't want to comment on a specific price target right now.
Sushil, before we thank you, would you want to stick your neck out and give us a 2-year target, hence, on Reliance?
I said that was for me.
Yes, Sushil, for you.
Yeah, so basically, I'll just take a minute. Let's assume that Reliance Retail deal at 4,21,000 crores on a normal run rate, including future acquisition, is somewhere around 2 to 2.2 times sales. And if after JioMart is launched, and if the sales accelerate by 50 to 70% on the retail front, as they're saying that the initial feedback of the JioMart is very positive, the sales can be projected 3.5, 4 lakh crores, 3 lakh crores, we don't know. So the entire retail itself can have a huge growth. And my personal optimism is on oil to chemical, where market is underestimating the value, which has been just a understanding between Saudi Aramco and Reliance once they come together for a strategic investor. The retail investor and the frenzy which will create on that is much higher. So if you look at 700, 750 per share on all the three segments today, less the percentage of share, I think if you take a 3-year outlook, the stock can have a potential to give you a double return. 3-year minimum investment, let's not look at 1 year.
5,000 on Reliance in the next 3 years. Okay, Prabal Sen as well as Sushil Choksey, both of you, thank you so much for taking the time out and speaking with us today. This is the big story that we break you on ET Now today. Amazon and Reliance are indeed in talks for Amazon to take a strategic 9.9% stake in Reliance Retail. It's being done by the principal promoters, but certainly talks are underway.